All right, this is the last chapter that we're going to talk about in payroll accounting, and it's Chapter 6, Periodic and Year-End Payroll Reporting. We're going to break this down into several videos depending on what we're doing. So the first part, we'll talk about our payroll liabilities and when we need to pay and things like that. The next videos after that will be some of the forms that we need to send in, like the 941, the 940, and W-2, W-3, things like that. So first is our payroll liabilities, and let me skip over, there we go. We need to pay our payroll liabilities periodically, and depending on the amount that we owe, that's what determines when we pay. So let's just take a look. I'm looking at page 179, and it looks similar to this that we're looking at on the screen. So first of all, let's find out when these payments are due, depending on what kind of payment plan we're on. If we're monthly depositors, that's what we're called, depositors, because we're depositing that money into the federal government account. So if we're monthly, or if we're semi-weekly, meaning there are two different times that we'd have to pay. If the payday falls between Wednesday and Friday, we would owe those taxes by the following Wednesday. If the payday falls between Saturday and Tuesday, we'd owe them by the following Friday. So if we're, it depends on how much we owe again as to when we have to pay it, whether we're monthly or we're semi-weekly. The best way to do that is to look at a problem, but I'm going to give you the explanation first, and that has to do with the look-back period. And actually, I think the slide may talk about the look-back period. So not really, it doesn't really say, it just talks about the look-back period, but it doesn't really say what it is. So the look-back period is a period of time that the federal government looks back to determine whether or not you're a semi-weekly payer or a monthly payer. So they look at the previous July 1st through June 30 year. So this is what's kind of goofy, but if during that look-back period you owe less than $50,000, you're a monthly payer or monthly depositor. If you owe more than $50,000 or more, then you become a semi-weekly depositor. And please note that, and this is listed on page 183, it's a little note that you can become a next day depositor if your liability exceeds $100,000 on any one day during that period. If you owe more than $100,000 to the federal government for your employment taxes, then you would have to pay those, you'd be liable to pay those the very next day after the payday. So if payday was Friday, Monday, because you don't usually have to pay on the weekend. But so the look-back period, let's look at an example of this. There wasn't a good example within the book, so I went back to the practice set. So I'm going back to practice set B, and I have to find that, page 217. So it's a little ways back. There's practice set A and then practice set B. I'm looking at number 1. And so it says, a company's total taxes owed for the 6 consecutive quarters. They had the first quarter of 2015, first quarter of second quarter of 2015, third quarter of 2015, and the fourth quarter of 2015, and then the first 2 quarters of 2016. So for 2017, the look-back period begins, we'll go back 6 months, so that gets rid of the third and fourth quarters of 2016, and we start there and go back a year. So the second and first quarters of 2016 and the fourth and third quarters of 2015. I hope that makes sense. So you skip the first year, you're going backwards. You're going to skip those first 2 quarters, the last 2 quarters of the year, and then go back a year from that. So the third quarter of 2015 is July 1st, and then the fourth quarter, the second quarter of 2016 ends June 30th. Okay, I'm really messing that up. I'm sorry. The third quarter, or July 1st, 2015 through June 30, 2016 is what you look at for 2017. Add all of that together, it comes to 49.7, less than 50,000, so they're monthly depositors. That's what we need to know. They're monthly. I think that's the only one that I had to look at. So keep that in mind as far as when to deposit those taxes. The next thing in this chapter has to do with unemployment taxes. And let me skip over to the next slide 5. Here we go. Unemployment taxes, also page 180 talks about this, submitting your unemployment tax payments. And the little table right here, the same as what we have in the book. For the first quarter, it's due the end of the following month. So for every quarter, it's due the end of the following month. The first quarter, April 30th, second quarter, July 31st, and so forth. Again, if your liability is less than $500, you don't need to pay until it reaches $500. If you go all year without it reaching $500, you're just going to pay it at the end of the year. You can pay it with your annual 940 form. When the payment date falls on a weekend or a holiday, and this goes for just about anything, it's paid on the next business day. The last thing having to do with payments of when you have to pay things are those voluntary deductions that your employees had withheld from their paychecks. Those are paid whenever you get around to paying them. Whatever contract you are liable for contractually. If you're supposed to pay 401k payments to the administrator every pay period, then you pay it at the end of that pay period. When you pay your employees, you'd also pay the administrator, so that they can invest that money. You wouldn't hold on to that money of your employees all year because you want that invested for them. So that is really going to depend on what each contract states. And I think the only thing I have remaining in this chapter that I wanted to talk about has to do with EFTPS, for electronic funds transfer. The book talks about that a little bit on page 183. And the main thing that I want you to know about electronic funds transfer is that it's required by the federal government. You can't just mail those payments into the federal government manually with a check. They have to be paid electronically. This brings up a really interesting point in the state of Colorado and any other state where marijuana is legal, because marijuana might be legal for state purposes in some of those states, but it is not legal for federal purposes. So when this first happened, the banks, who are highly regulated by the federal government, would not open bank accounts for these marijuana companies because they were afraid of being fined by the federal government for opening accounts for people who were illegal. So these companies had to pay, since they couldn't get a bank account, they couldn't do electronic fund transfers, they had to make these payments by either cash or money order. So that brought up a very interesting topic when these companies started getting fined by the federal government for not paying their taxes properly. They paid them on time, they paid the full amounts, but they didn't pay them in the proper method, which was electronic funds transfer. Some of these companies, or at least one of them, sued the IRS and said we should not have to pay fines and penalties and fines for and interest for doing this payment incorrectly when we tried to open a bank account and they wouldn't let us. And they went to tax court and won, which I thought was a great day for federal income tax purposes, because the little guy here won. It didn't seem fair that they tried. They would have paid properly if they could, but the banks wouldn't let them. So I think that's all I want to talk about for this part of the chapter. Next video we will do the 941.